Imagine a world where the sound of jingling coins or the feel of paper cash is nothing more than a memory. You walk into a store, buy a coffee, and tap your phone to pay. No cash, no card, no delay. You send money to a friend in another country, and it arrives instantly. No wire fees, no delays, no intermediaries. This isn't just a possible future. This is the financial transformation already unfolding around us. At the center of this revolution is something called a Central Bank Digital Currency, or CBDC. CBDCs are not cryptocurrencies, though they may look similar at first glance. They are digital versions of a nation's currency, issued, controlled, and backed by the central bank. Unlike Bitcoin or Ethereum, which are decentralized and volatile, CBDCs are designed to offer stability, transparency, and trust, just like cash, but digital. And here's the kicker. As of 2025, more than 130 countries, representing 98% of the world's GDP, are actively researching, piloting, or rolling out their own CBDCs. This isn't theoretical. It's global. It's happening now. But what exactly is a CBDC? Why is nearly every major government in the world pursuing one? And more importantly, what does it mean for you, your money, your privacy, and the global economy? Let's start with the basics. A central bank digital currency is the digital form of a country's legal tender. Think of it as a digital rupee, digital dollar, or digital euro. It functions like physical cash, but it exists entirely in digital form, stored in an app, a digital wallet, or potentially on a card that doesn't require the internet. It is accepted by law, backed by the government, and can be used for anything from buying groceries to paying taxes. CBDCs can come in two main types. Retail CBDCs are intended for everyday use by you, me, and businesses of all sizes. Wholesale CBDCs, on the other hand, are designed for use by banks and financial institutions to settle large transactions and improve interbank transfers. Some countries are piloting both, while others are focusing on just one model. So, why the urgency? Why are central banks suddenly racing to develop their own digital currencies? There are several powerful reasons. First, cash usage is plummeting. In many countries, people now use cash less than ever. Japan reported that cashless transactions accounted for more than 42% of all purchases in 2024, far above its earlier government targets. In Sweden, the use of physical money is so low that the country is preparing to go fully cashless. With fewer people using coins and bills, governments must ensure their currencies remain relevant in the digital age. Second, private digital currencies, including stablecoins and cryptocurrencies, are on the rise. These privately issued digital assets often operate outside of traditional financial systems. While some offer fast and low-cost payments, they pose serious challenges to national monetary policy and financial stability. Governments worry about losing control over their economies if private digital currencies become the dominant way people transact. Third, financial inclusion. Globally, more than 1 billion people still don't have access to a bank account. CBDCs could offer a solution. By allowing people to store money and make transactions with just a mobile phone, a CBDC could help lift millions out of the informal economy and bring them into the financial mainstream. And fourth, cross-border payments. Today, sending money internationally can be slow, costly, and opaque. CBDCs offer the potential for near-instant international transfers with minimal fees, which could revolutionize remittances and international trade alike. Let's take a look at the real-world rollouts already in motion. China leads the global CBDC race with its digital yuan, or 𝐻𝐶NY. Since its pilot began in 2020, the digital yuan has been tested in dozens of cities. Chinese citizens have used it to pay for public transportation, receive government subsidies, and make everyday purchases. By 2024, over 300 million users were participating in the pilot, with total transaction volumes nearing $1 trillion. The Bahamas was actually the first country to officially launch a CBDC, the sand dollar, back in 2020. It was created to address banking challenges in its scattered island geography. Because the sand dollar can work even in offline mode, it's become a vital financial tool for citizens living in remote areas. India has also launched a pilot for its digital rupee, aiming to reduce the high costs of managing physical cash and improve payment efficiency. The Reserve Bank of India is collaborating with major banks and fintech companies, gradually introducing the digital rupee into retail and wholesale markets. Europe is not far behind. The European Central Bank has been actively developing the digital euro, with a decision on its official rollout expected soon. The goal is to preserve the euro's role in the global economy and offer a reliable, state-backed alternative to foreign digital payment providers. Even the United States, traditionally slower in this space, is now exploring a digital dollar. Pilot programs are underway, and policymakers are debating key issues like privacy, financial surveillance, and economic control. It's not just about national currencies either. Cross-border CBDC projects are gaining momentum. One major initiative is Project M-Bridge, a collaboration between China, Thailand, the UAE, and Hong Kong, which aims to enable instant cross-border CBDC transactions using a shared blockchain platform. Now let's talk technology. CBDCs can be built using a variety of infrastructures. Some use centralized databases for speed and simplicity. Others rely on distributed ledger technology, similar to blockchain, to increase transparency and security. Some use a hybrid model that blends both. A major innovation in CBDCs is programmability. In simple terms, programmable money can carry rules, conditions for when and how it can be spent. For example, stimulus payments could automatically expire if not used by a certain date. Tax refunds could be sent instantly. Rent or salaries could be programmed to transfer on a specific day. While this offers efficiency and automation, it also raises serious concerns about control and freedom. If money can be programmed, who gets to decide the rules? Privacy is another huge issue. One of the biggest fears with CBDCs is surveillance. Governments could, in theory, track every transaction you make. Most central banks are aware of this concern and are designing systems to allow anonymity for small payments while still complying with anti-money laundering regulations for larger ones. When CBDCs launch in your country, you'll probably use them through a mobile wallet, either an official app from the central bank or a third-party app from a licensed provider. Some countries may allow offline CBDC usage, enabling payments without internet access through technologies like Bluetooth or NFC. But the impact of CBDCs won't just stop at payments. They could reshape the entire banking system. If people start moving large portions of their money into central bank wallets, commercial banks could see a decline in deposits. That could affect their ability to issue loans and maintain liquidity. To prevent this, many CBDC models are intermediated, meaning that commercial banks still manage the front-end user experience, while the central bank handles the core infrastructure. Risks remain, of course. Cybersecurity is a top concern. Central bank systems will be prime targets for hackers. To maintain public trust, these systems must be secure, redundant, and resilient. And then there's the digital divide. Millions of people still don't have smartphones or access to the internet. Any CBDC rollout must include plans to ensure accessibility for all through offline capabilities, public education, and inclusive technology. Looking ahead, CBDCs could integrate with digital identity systems, smart contracts, and even tokenized assets. Imagine an ecosystem where money, IDs, and legal agreements operate seamlessly in one secure, programmable platform. CBDCs could unlock new possibilities, but they also demand new safeguards. So what does this mean for you? Start by educating yourself. Follow your country's central bank announcements. Try pilot programs if you can. Read privacy policies. Think critically about who controls your data. and participate in public feedback when CBDC consultations are offered. The future of money is being built right now. Whether it empowers people or concentrates power will depend on how CBDCs are designed and how engaged the public is in shaping them. Central bank digital currencies aren't just another fintech trend. They're the next evolution of sovereign money. What happens next is up to all of us. Like what you heard. Hit subscribe, drop a comment, and stay ahead of the digital money shift.